Boo. All right, hey, how's it going, guys? Welcome to Ment Psychology, a quick video within which we'll explore an issue that I'm seeing someone have right now, an issue that I see consistently over and over again, and an issue that stands in the way of many people actually making it to consistency, profitability, paid out, funded, and doing this full time and long term, and an issue I see that keeps a lot of people trapped for a very long time in a cycle that is not very helpful and usually hinders and slows down their journey rather than speeds it up. So I'm just gonna make myself smaller here. We're just sitting here in the mentfx Discord group. Of course, this comes with the private mentorship along with a lot of other stuff like the mentfx structure indicator, a screener, a community, a course, everything that comes along with it. But you guys don't need that to actually find profitability. You can use a lot of the free stuff right here and work on yourself and get very good. And then once you're profitable, come and join the team to use the tools. But that's not about, this video is not about that at the moment. So something interesting that I see, we're gonna jump right into the issue rather than build up to it. And then we're gonna go through the back end story of it, is that we have a member who wants to basically get started right now. Like a lot of places teach, he wants to get his hands dirty as soon as possible. He needs to get into the nitty gritty. He wants to get onto an evaluation, onto a live account, and really feel the market. So one of the biggest things I try to tell people to stay away from is this need to feel or be the market and think that they're only going to learn from a quote unquote hands-on approach, because they haven't even defined hands-on approach yet. So they can get good at trading. So a lot of people in the trading space think that they need to invest in an account or start funding evaluation so that then they can get the hands-on feeling of what it feels like to have real money on the line, of emotions on the line, et cetera, et cetera, et cetera. Now that in itself is actually a very, very good and powerful thing to do. You do want to get your hands in the mud. You do want to feel how your emotions start to play into you executing a system. You do want to know how your subconscious, your mind, and everything reacts, and then focus on those reactions so you can nullify them and recognize how to nullify them. But the main issue is that if you begin doing that before you've done any of the prior work, then it's all for nothing and it won't accomplish anything. The likelihood of you taking a challenge right now, trading on a live account right now, as is, to get your hands dirty, all that's going to happen is within the first day, up to the first 3 days, up to a week, and some of you that last for some reason up to 2 weeks, will fully blow the account. And by the time that you've blown it, the only thing you will have learned is, I'm somewhat emotional, I did some dumb stuff. Those are the two main things you'll learn. And the third thing you'll learn is, I'm not ready. Or you will not learn that just yet, and you will continue on these two things for the next 3 challenges, for the next 3 funded accounts, for the next 3 accounts that you fund yourself. And you will continue this over and over and over again until this third guy pops up. I have not learned to do this yet. I need to take a step back and actually learn how to do it. So even though it's actually very good to test the waters, to understand how your emotions work, if you're doing it before you have a fully solidified system that you've already built confidence in and data collection in, what's gonna end up happening is you're gonna end up losing. So to iterate, to kind of go over what happened today, just a little bit, we have a member who basically said, I want to go ahead and do my first challenge. I just want to kind of start it now. And he said basically, said, should I send it? Should I do a $250 evaluation? Specifically talking about mentfunding's evaluation. Should I do the $250 evaluation just to test it? And of course the answer is no. And the answer to anyone watching this is no. And the answer to anyone along the same lines of asking this question is no. But and I responded instantly to that, because he said, if anything, it's a $250 learning experience, which it isn't, right? Remember that. Him spending that money is not a learning experience of any sort. The only learning he's gonna do is these 3 things. I'm too emotional, I don't have rules, I haven't learned shit. I need to actually learn. Which you can get from this free video, what you guys are watching right now. So what I wrote to him almost instantly is, this sounds like a terrible idea / plan. The way I viewed it, even in respect to the price of the course, So the price of being in this community, of having access to everyone, of being able to show up to webinars, of having access to the indicators, the screener, and everything along with it, is that you get 2.5 months for completely free of learning experience versus a guaranteed $250 loss for what I call basically an ego-based or an ego binge learning experience. The reality is he's not paying this money to take an evaluation or to put that money into a broker for the sake of learning. That's not what's actually happening there. He's putting that money in for the sake of a potential double up, for the sake of a potential big time run, for the sake of a potential crazy run, or whatever it might be, so that he can come back with some more money, is ultimately what it comes down to, even if the client, the member, does not notice that yet. And that is one of and that will eat away at you if that is the kind of boat you're in. Because that $250 loss, that investment, whatever it might be, for some people, $250 is a lot of money, and that's like, what the fuck is wrong with them? But for some people, it's nothing, right? If you're coming into trading and you're already making around 80K a year, or 100K a year, which was what my starting salary would have been had I gone the employment route, then $250 or multiple accounts of $250, even even like 3 accounts a month of $250 over and over and over again each month would be nothing to me. It would just be a joke. And if I did that, right, with a 100K base salary coming out of my job, right, that $250 loss is not amounting to anything. Similarly, if I upped it, if I was making 100K a year and I took on a mentfunding evaluation for $2 million and spent 15K, losing that would hurt, because that would be like a tenth, just over a tenth of my yearly salary. So losing it would hurt. But then again, there's only 3 things I would have learned from it. I was too emotional. I should not have taken the evaluation, right? AKA, I wasn't ready, right? I was too emotional. I don't have good rules. I am not ready. I should have just learned. So the point is, before you even insert a number that you're about to spend or put into an account or use on a funded account, the initial question is more so, do you even have a data collection of trades under your belt that you have some form of confidence in? Have you done at least some form of testing in the form of forward or back to demonstrate that in a market, even if it's not a live market, at least even in a simulated market that you play bar by bar, if that's what you want to do, or move from left to right, in an environment like that, have you been able to just somewhat execute a system that's profitable? And if the answers are yes, then you're at the beginning stages, right, of considering doing a version of, let me put some money up front to be in a live condition, a real live condition, or a funded condition, whatever it might be, so I can understand how my own emotions function during me executing trades, me managing my trades, how long it actually takes me to get into trades and execute them, and how does spread work and rollover, and how does news affect the markets that are happening, and how am I thinking during each independent trade, then it's a great thing to do, right? So everything this member wants to do right now is actually very good if he was at this point in his career. But the problem is he's right here, right? So he's right here, but he wants to do what he should be doing when he's here, and he's leaving out all of this in the middle. And when you leave out the most important stuff, which is the stuff in the middle, the stuff that actually gets you to a point where you can now put up real capital to learn a lot about yourself, well, he's throwing money in the fire, right? So I basically said it makes very little sense, right? I'd be focused right now on learning your system, your system, the aspects to it, and actual consistency. And I basically wrote to him, this kind of thinking goes directly into the kind of thinking I try to avert people from in the webinars. So we have a ton of webinars. They are part of the course. And this is a huge psychological talk, because I talk to traders every single week. I've had over probably 10 to 20,000 independent, individual, different traders from all walks of life, whether it be a month up to more, that I've surrounded and spoken with, including people, including thousands of traders from my YouTube and my Instagram that I've spoken to. Right, but I basically said, this is the kind of thinking I try to avert from you, right? So just realize that this is not a learning experience. You're about to send your money into the abyss. You're basically just throwing it in because you have an egotistical grasp on what you think is going to teach you, right? A lot of mentors in the space are going to tell you, and have told, and I've seen countless videos like this because I even was a student once, that you should open something up with real money and just understand and feel the market, you know, really get used to it. But the reality is it's complete nonsense. You can spend one of my favorite quotes that I use all the time with my students, that I kind of try to ingrain in people, is that if I take someone that's been in a completely simulated environment, or someone that has just done proper backtesting and data collection and hasn't touched a piece of live price, but has done that for 2 years. So 2 years of testing one system, of one criteria, getting used to seeing how it functions, getting used to seeing when it works, getting used to seeing the contexts within which it works, and just having a fully backtested based background that has spent 2 years doing so, and has, you know, up to 1,000 trades in a data document, at least showcasing what his system can and does look like, versus the person that has spent 3 months in the market live, but hasn't done any learning prior and is ready to put in another 10K into the market to really get the feelings down. So he's at least gotten some feeling out of the market. I will always go for the person. Well, I'll always go for option A. So if I'm looking to fund someone with my own capital and take on my own risk on someone, right, like mentfunding does, I don't care whether you come from an environment that was live before. What I care about is that you've done the work that shows and proves to yourself that you're capable of making money, right? Because if you've done the work, funny enough, you also have the confidence to back all the work you've done, which means that when you go live and the issues that happen to traders come up, the fear of losing money as you're in trades, the fear of seeing that P&L kind of go down or go up, or the percentages go down or going in the drawdown and all this stuff, the person that is better equipped to deal with it is not the person that has been randomly doing shit live for the last 3 months to a year. The person that's better equipped to deal with it is the person that has over 1,000 recorded instances and trades under his belt that have shown him firsthand what losses look like, what break-evens look like, and what wins look like. That way, when that person, even though it may hurt emotionally, to start seeing those potential losses, to start seeing those drawdowns, whatever else might be, will be so much better equipped because of his background that he can look at those losses and allow them to happen, rather than consistently do random shit, rather than consistently start increasing their stops randomly or increasing their risk randomly. And that's just the truth of the market. Now, of course, the real answer is you want a balance between the two. Of course, a balance between the back testing and the data collection and learning the concept and learning how to find these trades and what context to find them in with the live. But again, think back to this right here. If you are skipping to doing that live stuff before you've done any of this work in the middle, you are never going to be ahead of the person that has spent all their time doing this thing online, or doing this thing in a backtest environment, or doing this thing in a data collection environment, because that person has more confidence than the other one will ever. And within probably even a week of live execution, that person will fix their psychology and fix elements of their psychology in ways that the person that's trading live and started trading live instantly just to feel the market is never going to be able to do. Yeah, so it's a cancer. It's something that you cannot let affect you. It's something that you should not buy into. Clay said, I remember Ment said something similar to the situation in a past webinar. And I think this is really important to remember. This is the last thing I'm going to say before I leave you guys. The equivalency of what this guy is doing, this is an anecdote I use all the time, is of someone going to college to be a brain surgeon. So imagine someone's going to college to become a brain surgeon. They've set their minds on being a brain surgeon. Now they're around 3 months in the college, right? So first of all, college is about 4 to 5 years. Then the Then you have to take the next step to be a surgeon, which is another 5 years, I think. And then I think there's multiple certifications and multiple tests for another like 2 or 3 years. Like I think it takes like 13, 15 years to become a surgeon. But okay, we know that. So into about 3 months in the college of studying, the person that wants to be a brain surgeon gets a little bit bored. I don't really want to do all this work, right? This is kind of a lot of work that I have to do. So to ease the work and to skip all this nonsense that I have to learn, I'm going to go perform a surgery right now. Okay? That's what I'm going to do. Let's fucking go. And that guy walks into a surgery room. Now, thankfully, like Clay said, it's not possible because your superiors would say you're an idiot and not let you perform the surgery. Now, guess what, guys? In trading, there is no superior. You are your own CEO. You are the CEO, the employee, the security, the person that works for the cybersecurity, the person in charge of the accounting. You are that person across the board. There can be no flaws across all this. There cannot be an employee or part of your brain that is unable to deal with the job that you're being made to do. And sadly, also beautifully enough as well, in trading, you have nobody unless you work for an actual like live trading desk or something where they're watching you and they'll fire you if you're being an idiot. There is nobody there to say you're being a complete idiot. Get the fuck out of my surgeon room. You have not done the work to be a surgeon. Get the fuck away from my hospital. You haven't done any of the pre-existing work. Why are you even in this building? Why are you wearing that fucking garment? Get out, right? There is nobody in the trading space that's going to say that to you. The closest thing you might get to that is this video itself, or a mentor, or a webinar, because we have tons of webinars where this is kind of ingrained and instilled in you forever. Because in trading, nobody looks over you. You look over yourself. So if you're that person too, very quickly, if you're that person that's about to have their surgery done, let's say you broke your leg and you need like knee surgery. The question now becomes, would you rather the guy that has been performing a few random surgeries here or there with no background? He doesn't know anything about sanitizing the things he's using. He really just is going on a whim. Perform the surgery. That's A. Would you let someone like that? Or, on the other hand, someone that actually has no skill, he's never done this before, but he's done that 15 years of proper work, has full understanding of how things should be done, has ran the testing on rubber people, like the fake stuff, used the cutting, has done it all, so knows the exact actions he has to perform, knows how to do it, just has never done it on a human, but has done all the 15 years of work, of schoolwork, understands how to properly sanitize, what kind of environment the person needs to be in. The question now is, which person do you want to work on you, A or B? Now, some of you still, even after this example, will pick A. And what's interesting is if you pick A, your odds of success and of making it in this industry are actually already lower than anyone else's, which is okay because you can still succeed. So that's a good thing. So even if you picked A, you can still succeed, but your ability to succeed is already going to be significantly lower. And if you picked B, then you have a proper understanding of what it takes to perform a job. And if you have a proper understanding of what it takes to perform a job, the question becomes, why are you treating the thing that you want to do for a living full time, which is trading, any differently from something that you would take a lot of time to think about and decide whether or not it's even, and have a crucial decision at some point in your life to be made, whether it's surgeon A or surgeon B? Why are these two things not stacked next to each other, if not trading being stacked even higher? Because if this is something you want to do for a living, which means you consistently can do it without any interruption or problem, why is there any consideration of any sort for you to have a shortcut or to make any form of a skippage? So, welcome to the trading space, where you can do absolutely anything the fuck you want, and nobody's gonna stop you. You can go perform that open heart surgery on someone in the hospital and no one's going to say anything. The only repercussion of doing so is that, one, you will lose almost all your money before you're able to use this skill, and therefore you end up quitting and having to do something else with your life, if anything at all. You lose all your money. Or two, you never / take extremely long to learn. There are things that you can do to get where you want to be a lot quicker. I'm going to leave you with this final note that I say to everyone, every single, like in a lot of my webinars in the private mentorship. The fastest way to get where you want, the shortcut to getting to exactly where you want, is to actually take the slow route, because the slow route puts you in the top 10%, the top 20% of those that succeed, or in the top 80% of those that succeed, and within that, you can reach milestones that you personally thought were unreachable before, and you get to scale that mountain, right?